Up 1.6 million in all-time profits, and man, you came from Caracas, Venezuela. So, like, what are you doing? What are you doing?
I think what I got from the events was that, I don't know, this guy's real. It's because there's short sellers that need to cover their position and they need to buy it.
Welcome to a brand new podcast, Trade the Advantage, created to dive deep into the charts and strategies. Today's guest, the first guest on the Trade the Advantage podcast, is originally from, let me pronounce this correctly, Caracas, Venezuela. How's that for an introduction?
Bello, an accent, man, and Brazil is hitting you. You're getting a little bit of Latino blood on you.
Tô falando sério, cara, meu amigo.
Mira, tá viendo, ¿no? Love it, bro.
He's a 500,000. That is 500,000 for those who are in Portuguese. I think it's the same word in Spanish, right?
Yeah, it's the same.
Same thing.
I can even tell whenever somebody speaks to me in Portuguese, like I understand. I just don't talk Portuguese.
We'll practice a little bit today, but Edu's up 1.6 million in all-time profits, and man, you came from Caracas, Venezuela. So, like, what are you doing?
I started when I was in Venezuela, and it's funny that now you're with Zimtra now, and if I had Zimtra when I started, it would be so less trouble, because what back then we had to have that PDT thing, and gotta have like 30 grand in order to trade properly the way I trade, right? In intraday trading. So now I think you open an account like with a grand, like $1,000, and you start trading. Like that's something that we didn't have back then. And also the whole content and the whole information that you get in such an easy way. It's so, like, I envy the guys that are starting right now, just because they have so many ways to do it easier than we did back then. So it's pretty cool.
No, absolutely. And that's we'll definitely get into a couple of charts. I think what we'll do in this podcast is Edu is literally going to break down like how to get started in trading, maybe one or two setups that he's traded, stuff like that. But I mean, just to touch on this, like, I remember when I first got started, commissions were like $5 in, $5 out. I was trading under PDT. At like, if I, to have access to short locates from a good broker, I had to have 30k in my account. And yeah, now I have Zimtra. I mean, and it's cool, right? It helps a lot. It's democratized the process.
100%. I think the same way. And right now, to have that easy, to have that availability of locates that easy, that's what creates this whole thing. Like, easy, like we were talking about this DREUG, it went from the twos to from the high twos to 46 today. That's crazy. And that's because of that. Like, now brokers have more accessibility to locates, and that creates more people being able to short that, and that's what creates a madness in the short squeezes. So it's a good thing. Whatever is your perspective on it, it's a good thing, because it obviously, people that short these things are getting wrecked right now, of course, and that's why you have to have this. I like that you're doing these things, because you have that education that people can get access to, and they don't even have to pay for a room or anything like that. They're just getting access to people like us that we have been in the game for a while, and we have seen quite a few things, and now we can, in a way, transmit that experience to you guys, right?
Yeah, look, and obviously, podcast hosting, working with Zimtra, but like, people need to know that trading is now readily accessible to a lot of people. It's democratized. It's open to everyone, and like, So, and you're basically helping to spread this message. So we'll get into like how you can set up an account and stuff like that, or how to create the watch list. But like, tell us a bit about Spain, Madrid. Tell us a bit about like Mexico, because you're not just doing this stuff online. You're traveling. You're traveling around.
Yeah,
You're like a
you know what?
prophet.
Thing is, in my intermediate in my career, I started going to events. And when I started, obviously it was a little bit harder for me because I was in Venezuela and it was a little bit harder to travel and stuff. And now that I came to the States, it was a little bit easier for me to go from one place to another. And I started going to events. And one of the things that I really, really, that it really helped me in developing my skills in my trading career was going to events, specifically because there are two things that are really important. One, you think it can be done, and that's something that the online world is really hard to get, just because there are a lot of, as we say in our countries and stuff, mucho vende humo, which is smoke sellers, something like that. Well, people who sell promises. And that's something that is really hard to differentiate from one thing to another. Like, it's really hard if you don't know trading. It's really hard to differentiate between one guy that is being honest with his process and he shows you his results and is transparent enough to show you every single stage of his career, and the guy that wants to sell you a course of $199, right? So it's really hard to tell. You gotta be in the industry in order to really, for you can tell. And I think what I got from the events was that, I don't know, this guy's real. And not only that it's real, that he's like me. He's not smarter than me. It's not like whenever I saw Sanlucci and whenever I saw, I don't know, Tim Sykes, whenever I saw Nate, whenever I saw all these guys, they seem so like in the Olympus, right? Like gods. And with these events, you understand that they're like you. They have their struggles. They can joke about things like you. They're real. So that's something that really made something like a Roger Bannister effect for me. And also, when you can see what they're doing and the mindset that they have, it's like it clicked. So for me, one of the things that I really wanted to do in my career as a trader is to spread that message to the people that I feel more related to, or they feel more related to me than people that are being raised in the States, for example. That we have such a different culture that the message that you can transmit is in a different way. So I'm trying to do that with the people that speak Spanish, that has probably the same culture in Spain, in Mexico, in Venezuela, in Colombia, in Argentina, in all these Spanish speaking countries. And I started like bringing the things that I learned in those events to this different world in a way, right? And what we did in Spain was really amazing. Zimtra sponsored the event. We had 190 traders, and I think that thing really made a difference for a lot of people. Like, I see people that were making, I don't know, maybe $50 a day, $100 a day, obviously on average, right? And now they're making $1,000 a day, just because they saw Sanlucci, just because they saw Lance, just because they saw me, they saw Jay, and they were like, oh, so this guy, Mosquito, all these guys, oh, so these guys that are really similar to me, they are making that kind of money, and you know what? I can make that kind of money too. If I have that mindset, if I have that kind of, ways to do things. So that's why we're, dropping a little bit of that, what we learned in that environment, to Spain. We're going to do one in Mexico, November the 10th. It's all about learning, but it's also about networking. I think it's really important to know the people, you know, to understand what they're doing, to understand, hey, maybe a few advice that we can give in a personal basis, you know, and that thing you only can do it through events, through live events.
Yeah, and it's funny because like I remember I went to a few events as well in the early days, and that's where I started to believe. But it's like when you first start, like I was from England, and then I was in Dubai, and now I'm in Brazil. But like you think, well, why am I trading the American markets if I'm in England? Why am I not trading the FTSE? And people are thinking, well, why are the but like there's all of the attention, all of the eyes, all of the volatility, all of the opportunity in the US markets, right? So it's just about getting back, whether it's a broker, whether it's a prop firm like Zimtra, it's about getting the right person that enables that. But I mean, for you, if you want to bring up some screens, like for someone, whether it's Mexico, where the event is, or anywhere else around the world, like what's your advice to get started for someone to get started? What's your advice for an intermediate?
Well, I think there are tons of ways to get started, but what I'm going to do, maybe people would think it has a little bit of value, is what I do my daily process. And I'm going to walk through real quick. Obviously, you have a few details that you have to understand before you go through this, because you have to understand the penny stock framework, for example. Like what pattern do I focus on in order to to understand what stage I am in that stock regarding that penny stock framework. Yeah. So let me go through this real quick. What I'm going to do first is show you what the penny stock framework is. So I'm going to bring my whiteboard thing, and nice. It's going to be something like this, right? Penny stock framework, you have nothing going on, and then you start to have this crazy run up, and then you have something like this. And the most important thing is the volume, right? You have nothing volume here. You start getting a little bit, let's put it like in green. You have a little bit of volume here. Then you start increasing volume, increasing volume, increasing volume. Then you have like the famous blow off top. And then you start getting this fade that it loses the attention from people, right? And it dies. And it's like pretty much what they do. Why? Because they do what we call the pump and dump, right? They do these kind of things because they want to pump their price on the stock, and they usually dump their shares due to, for example, dilution. And that dilution is because they financially, their stocks or their companies, they're really, 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 really bad companies. They don't make money at all. So this is what we do. Like we always are looking for this, whether this is going to be in 1 day, 1 week, or even in pre-market. Like you can see this, that the challenge in this, they all do this, or let's say 90% of them do this, right? But the challenge here is, first, you don't know what price is the top, right? It can be 1, it could be 10, it could be like drop 46. You don't know. And you also don't know the time. So you don't know if this is going to be for 1 day or for 1 week or for pre-market or whatever, right? Or 2 days or whatever. So I am going to have this as a reference. That's my framework. And that's what Tim Sykes shows, right? That's what he teaches. And I think that's the best way to approach these things. So what you're going to do is look for this so you can understand in what stage you are. For example, if you're in this stage over here, you're looking for breakouts, for intraday breakouts, right? Or multi-day breakouts. You don't know. If you're in this stage over here, you're going to be in first red days. If you're in this stage over here that goes like this, you're going to be in overextended gap downs. If you're in pre-market and this is the pre-market high, for example, you're going to look for gap and extensions, for example. And all these are strategies, right? And all these strategies have something in common, that is the risk and obviously the reward that you're aiming to. But most important is the risk. Where is this thesis that this thing is going down or up? Where is it wrong? And where is wrong? Well, the price level where the penny stock framework shows you that it's not there. For example, if I'm trying to short this as it is a first red day and we're here, obviously the risk will be the open red to green, right? And that's where I stop out, just because I don't know if this is going to be like this, or maybe it's a fake out and it's like this and it's going to go down. Like that's what I don't know, but it's my scenario, right? So we're good so far.
Yeah, no, I just think it's really interesting to say, like, I mean, this pattern's been happening for God knows how long, and the pattern never seems to change because human emotion doesn't change. So it's like, it's not like you're drawing a random pattern. This is a pattern that occurs over and over and over and over in the market. And it's similar, multiple patterns in one, really, isn't it?
Exactly. And most important, this is for small caps, just because they're crappy companies. Just because of that. Remember that the only way that they can make money is through dilution. And you can see that in if you want, we can go through this like real quick. In here, if you see every single, if you see for example, drug.
This was the hot stop today, by the way, for anyone looking on October 15th. Drug went from, 2 to 48 today. That's money-making volatility, but there's a huge amount of risk that can come with it as well. And this is why you need to have risk precautions with your prop firm or broker.
So all of these, like 90% of them, remember, it's not absolute, but most of them, they don't make money. The operating cash flow is the difference between what you make and what you spend, right? And it's always in negative, right? Most of the times. So the only way that they can finance their operations is through the market, like the offerings and all those things, which are dilutive. And that's why they get their money from there, so they can fill the gap between what they're losing and what they have to have in order not to go bankrupt. And this is why they all do that. And that's what you're looking for, that pattern. So the first thing that I do, you go through your scanner, and that will show you, hey, what stocks are up. Why? Because the pattern always will show you a run up at first, right? At the beginning of the pattern, you will see a run up, right? And that's the first thing that you do. So you look for that stock, and whenever this thing is at 50. Look at this. My God. Look at that. We started at the 2s today, and now we're at 50. That's
so if you go on the day here, if you just click the daily of this, just to take a look at it, because does this fit that framework? Because it kind of just blew through with any ramp up. Do you know
exactly
what I mean?
What I'm going to look for? It's a first red day, right? And when I'm going to look for it tomorrow, or it can run up for 3 days. I don't know, because I don't know the timing. But I know that as these things go up like real quick, and they go down and they bounce back and they start fading due to the attention. See that the attention today is really hot. When it's that hot, you cannot short. That's why I never short the first green days, right? And when it's historical volume, when it starts to fade the attention, that's where I start looking to short it. And the first thing you do, the scanner, then you start understanding a little bit the historical chart, which is what we just did. Like if it's a former runner, look at this. This is so crazy. Drug is so crazy, and it's really a particular case, and it's really hard to. These things are really, really hard to short. But if you see different stuff, like for example, Verb and all this, they all do the same. This is the penny stock framework in 1 day. This is the penny stock framework in 2 days, and you'll see the same thing over and over and over. So, first scanner, then you go through the historical chart to see if it's a former runner and if it's where do they have the resistance, what in which stage of the pattern this is, etc. Right? I'm going to go through this real quick, so it's
high level overview. But it's fantastic, so people know where and how to learn. Because most people trading, a lot of them, like I think, I don't know where to start. So you say, look, this is it all. Now dive into where you need to improve.
Yeah, it's gonna be a quick one. Obviously, you're not gonna have that much of a detail, but like the general thing. Then you understand what industry is in and where is it. Like if it's from China, I'll get a few red flags. If it's from the States, okay, I could do this. If it's from Canada, okay, it's foreign, so they cannot do a few things. So I understand that it's from an industry, which is a biotech. Then I see I look for the catalyst, whether this has, I don't know, earnings, or it has a contract, it has an FDA approval. Like it has to be something that fundamentally moves the stock. If it's not, if it's technical, I have to take, an understanding of that. For example, this one. This one is a recent reverse split. Well, it's not recent, but it's a reverse split. It's a low floater that doesn't have any news. So what happens when something is 100% up and doesn't have any news? People start shorting it. And when they start shorting it and it's such a low float and it gets that much of attention, it creates all these crazy things that is a short squeeze. Once you understand the catalyst, you go through the statistics to understand the composition of the float. The float is the number of shares that the retailing has in order to trade, and the institutionals. You understand that composition by understanding this has a 3 million float, the outstanding is 4 million. The difference between them is the insiders. And you have, from this float, you have 4% that the institutions control. It's really important to understand whether the institutions and the insiders are big. Then you understand the cash flow. If they don't have any cash, they usually are more willing to create dilution. They're more willing to issue shares in order to fill that gap between what they need and what they have. And that's why they create something that in this tool, Dilution Tracker will tell you. And look at this. This has a lot of cash, right? Because they have been financing years before, but they have been, eating it up. And they have warrants, but they're not registered. And they have a couple of things that I don't want to get into the dilution too much, because it's probably the most complicated part of the watch list, of creating the watch list. But what you have to understand is dilution is potential supply. And when you have potential dilution, it means potential supply. And that's why 80% of the stocks that gap up end up red on the day. Why? Because of this. Like they all do the penny stock framework. There are outliers like the RUG that bypass that, and maybe they take a little longer in order to crash, right? And that's why you have to understand that once it hits your risk level, you got to get out, whether it's long or short, right? And once you understand the dilution, what you're going to see is your playbook. The playbook is something that, it's like when you're playing American football, when you're playing whatever sport, you have to have a strategy in order to take advantage of that, stage of the penny stock framework. And that's where we do it.
No, that is literally your advantage. That's how you trade your advantage. That is your edge in like literally 10 minutes. I love it.
Pretty much. Because obviously on the playbook, you get more detail, and obviously you get more detail about regarding dilution. For example, what's more diluted than the other? Like if you have ATM at the market offerings, obviously that's super dilutive. But if you have warrants in a price where the exercise of the warrants is below the price of the market, it means that you will get potential dilution. So all those things, obviously you will have a lot of details, but pretty much in a general basis, that's what we do in order to approach the market every day.
Yeah, but it's crazy because it's like It took you, how long did it take you to get profitable? Because you've just summarized it in 5 minutes, 10 minutes.
4 years. 4 years.
And the reason that you didn't get profitable in 2 to 3 months is because there's a million nuances. There's a million nuances to what you've just said, right?
I think the expectation of being profitable is the things that doesn't make you profitable. Because if you see this as a game, it will be so much different than if you see it as money and making money and blah, blah, blah. So I think I wasn't profitable, not because this is hard. Like the patterns are really straightforward. But I think that the hunger to make money is what makes you a little dumb whenever you're not paying attention to the patterns. This is up because people were shorting it and people are blowing up. Like I know a few friends of mine that sadly like destroy their accounts.
Seriously?
Because they were shorting it and they were so involved in the emotionality. And remember that it's a black swan event. Like this doesn't happen every day. So obviously as you get a lot of good moves in your favor, 80% of them crash. So whenever you're not getting the one that doesn't crash, you get excited, you get anxiety, you get, a lot of emotions and doesn't like blur you from that rationalization of what's happening really in the market. So I think it's that rather than it's being harder or easy.
It's hard though, because you've said a few times, look, these companies don't have cash flow. These companies are using dilution, which creates another level of supply. You've got the stats in the data that say 80% of these fail. So it leads people to believe that they can just short everything. But then this happens. And this is when people make money for 3 months and then lose it.
Blow up. Totally. And this might be an amazing opportunity in the long side too. Like I didn't take it that aggressively just because it doesn't have any catalyst. Like there are a few things that really got me a little cautious on it, and maybe obviously seeing it as a hindsight thing. Obviously I was wrong, like totally wrong, but I made a few bucks. Like I took advantage, and most important, I stay away from this kind of move on the short side. So I guess more like, hey, I'm not making that much money on this. Hey, I'm really not losing money on this.
You saved a lot of money on that. I mean, but like a lot of traders just don't have the discipline to stay out of the trade, even though they know that they shouldn't. I struggled with that. I'd be like, I know I shouldn't touch this, but it's up so much. Like, how did you learn that?
Like,
how did you learn that?
2,000%. Like, really? It's 2,000%.
You
so
went
crazy.
long. It was up 1,500%. Most people would say this company's junk. It's up too much. I have to short it. You went long. Most people say it's up 1,500%. It has to come down. You went long.
It has to.
You went long. Tonight, up 1,500%. Why did you do that?
Because I know that shorts are in trouble. It's not because of the value of the company. It's because there are short sellers that need to cover their position and they need to buy it. And as they have to buy it due to this crazy anxiety, due to that crazy fear, due to maybe the brokers have to close your position because you know, margin calls and all those things. That's what creates the demand. And that's why I thought, obviously I didn't hold it that much. Like I maybe I had like 3 trades of 15% each. And that's how I made money on this one. But it's not like I held the 2,000% run up. And that's something that people don't understand, that singles win the game in this thing. You don't have to aim for a home run in order to, you know, become consistently profitable. You have to only, like, if the move is a 50% move, you only have to get like 15 to 17% of that move. You don't have to be perfect. You just have to, you know, get that meat of the move in order to consistently do it. Because if you think that you have to be perfect on these things, you're never going to trade them, ever.
But I mean, the SPY does 15% in a year, and that's if it's a good year. Like if it's a bad year, you might lose 20%. So 15% in a trade is not bad at all. But I mean,
Not at all. But you know what, Steven? People don't see it that way. I have people in my room that probably make like 100% of their account in 4 months, and they think they underperform. And I'm like, you have to have perspective. Making 1% in a day, it's amazing. It's incredible. You're gonna crush. Obviously, you're with less money than any hedge fund manager would be, obviously, and liquidity issues won't let you scale that much. But if you have like a $2,000 account and you make $50, that's amazing. That's incredible. Because if you can do it in a consistent basis and you can cap your losses in a way that doesn't become a disaster, you will probably make what, like 100%. I'm up like 700% this year. Like it's crazy. And whenever I say that, people are like, "Oh, this guy's full of." I'm just like, okay, I have all my my things that I use in order to be transparent, and I go like, "Hey, I don't want you to believe me, but if you do, this can be done. If this can be done, obviously, I have drawdown, Steven, of 30% of my account. Like you gotta be willing to lose a lot of money in order to compound that way, that aggressively, and always to diversify. Like I never put my whole net worth in one account. I always, hey, if I make, I don't know, $5,000 in a week, I withdraw that money and I keep the money. And it's not all the money that I withdraw. Lance told me that I shouldn't. And he told me, hey, you have to grow your accounts, but it's really important that you diversify and you take away money because this can happen. And if you're short in this, you're going to have a lot of trouble.
I've got a couple of quick questions for you based on what you've said. Like the first one I want to ask is like, look, how are you staying calm in such a crazy environment? Are you doing ice baths? Are you sober? I'm sober now. I haven't drank in like 34 days or something. I'm sober. Are you sober?
Remember that time where I was telling you, bro, quit drinking so you can be a little bit more disciplined. Remember? Right now, no. I tore my Achilles. I've been terribly ill for the last 2 months, so I haven't. Like I'm really sedentary in these days because I'm recovering from the injury, and this has taught me a lot of what I'm capable of. It's so important to exercise. Like it's so important to release that cortisol that these things brings to you. And I'm not doing it right now. And every time I have something that it's against what I think it would do, I get really irritated, like really quick. And it's something different that I've noticed. I've gained a lot of weight, and that makes you a little bit less with energy. And I'm a really energetic guy, and right now I'm like not that much. So you can tell, like you notice all the differences that makes trying to deal with this environment in a healthy way that in not such a healthy way. So I definitely recommend that people, it doesn't have to be something real like biohacking or all those things. You just have to be a little bit healthy, just move around, jog, go to lift some weights, get some boost, and and try to face the market as always.
Yeah, I understand. Like, if I don't exercise, I get pissed off with the world. Like, you need to get
super bitter. Super bitter right now. I almost broke one of these things like 4 days ago. The CHSN, it was crazy.
But are you nearly on the other end of it? Like, are you getting better? It's how long you out for?
I am, but it's such a really hard injury to recover that you gotta be really disciplined on your therapy and stuff, and you cannot do a lot of things because you cannot jog, you cannot, but I'm been going to the gym and, you know, lift some weight stuff a little bit, but it's just not the same, bro. Like,
No,
you know,
man. I'm
I'm
running a lot
recovering.
of. I was running half marathons. I tore my knee, and I was out for like a year, man. It was just depressing.
But that's great. That's great.
I'm
I
better now,
remember
though.
that you used to drink so much back then, and you know, being
Say
really
this on the Zimtra podcast.
of course. Why
Nah,
not?
it's an improvement story. No, it's an improvement
Of
story.
course, you gotta be honest. Come on, and it's a good thing.
Nah,
I
to
used
buy
to
days.
drink a lot too.
To buy days, I was partying pra caramba.
Okay, Brazil, obviously, and you got yourself a Brazilian fiancé, so I know you were partying a lot.
No, I was partying in Dubai heavily. Living the good life. Do you know what I mean? Like 20s, 25, 30s. But then when I arrived to Brazil, got a fiance, getting married soon, calms you down a lot. Stop boozing altogether. Literally to have more energy to be more productive. It's in my job more than trading these days. But man, if you're trading and you want to take it seriously, like stop drinking. Like it's something I couldn't do at the time because I was too engaged in the life of booze. My fiance needs to close her eyes, but booze, chasing skirts, chasing women, and clubs. And I wanted that more than I wanted trading. If I'm going to be honest with you, I wanted that more than I wanted trading. And I made some money in trading, but I didn't hit the levels. I didn't hit the real levels that I should have hit. So what do you want more? Do you really want trading? Are you willing to quit drinking? Do you know what I mean?
I think this is one of those activities that you have to have it. You have to want it bad enough, and you have to sacrifice so many things. And that's why when people tell me like, yeah, I want trading to survive, I want trading to pay my rent, I'm like, you're missing the whole point, because this is such a challenge that doing it just to survive, it's not worth it. Like, you got to do it for greatness. You got to do it for growth. You got to do it for uh, having and pursuing the things that you really, really want, rather than just substituting my job and my income, you know?
Nah, I was talking to Jack. I was talking to Jack Kellogg a couple of days ago, and he was just saying like, look, I just loved it. Like I just sit for 13 hours because I just loved it. Like I didn't love anything more than that. And I was like, that's the dedication. It wasn't really to get rich, was it? It was just loved it. You know what I mean?
And it's not work. Like, people tell me all the time, like, last time I was like, people were kind of bashing me, like people not from the industry, like other people, like, you work so much, you always on that, always on the screens and blah blah blah. And I do it because I love it. I'm not doing it because I have to. I could, you know, not be here like talking to you, but I love talking about trading, you know, and that's something that it's a passion that you find. It's not something that, you know, you will feel it, that you will be 3 hours on the screen, 4 hours on the screen, 6 hours on the screen, and you won't feel that time passes, you know. But today I had such a great day, like just watching the stock go up and down. It's so interesting that I was so entertained. So I think you guys had gotta have that passion and gotta have that dedication in order to succeed in this.
So like, what's the reason why, from the people that you're seeing and meeting, what's the reason why they're not succeeding? Because many don't, right?
Managing expectations. That's the main reason. They think that they will make $2,000 in the first 6 months, and they will pay for their education and their experience, and then they will, you know, fund the accounts with the profits, and they will make $1 million in 1 year and a half. That's pretty much the expectations that most people have. So they're not seeing it as a business. They see it as a quick way to make money. And if you see it as a business, and if you treat it as a profession, you will understand that the first year you're gonna invest on it. You're gonna lose money. But why, when you create a pizza place and you put a pizza place into business, the first 1 year where you lose a lot of money, you say, no, I was investing. I wasn't losing money. I was investing. But whenever you do it in trading and people ask you, hey, you're losing or winning, you go like, I'm losing, you know? And I think it's the expectation part that people are not managing professionally enough, I would say.
Yeah, but that's life though as well. Like one of the main things that I've learned is that, especially when you get older, if you get a job and you're in that job for money, probably not going to like your job. You're not going to perform very well. You're not going to do very good. But if you get into a job because you think, I want this company to grow and I want to grow with it, you go in with that attitude for the long term.
But sometimes you got to do the jobs that you don't like, Steven, you know?
As well. I worked at McDonald's, eh? I don't know if you have ever done it. I was making Big Macs.
Of course.
Great Big Macs.
I cleaned power washing thing. I was doing
power washing machine. What were you cleaning?
Yeah.
What were you cleaning?
Like rooftops, like driveways. Yeah. I was a farmer. I harvest tomatoes. I harvest lettuce.
On my way.
But yeah, I was a farmer for a long time. I was into construction. I'm an engineer and I had to do those things. And sometimes in order for you to have that prize, have that reward to do the things that you love and you get rewarded, you got to do awful things too. And that's part of life too. You know, there are things that you don't like, you got to do in order to survive. And you do it because you know that it's a temporary situation and you know that it will be worth it once you get better at trading and you get those skills like really developed.
That makes full sense. If I just take you back to trading, just as a final question, I think, for those who know the penny stocking framework pattern, it's universal pattern ultimately, but like, what's the favorite part of the pattern that you most commonly like to play? Where's the real money at? Is it like the first red day, the bounce?
Drug, the pattern that Drug made, the first green day like that. It's for me, it's what I call gap and go. I think that's the best part for me to make money because it can go 2,000%. Like the first red day is my favorite short pattern. But at best you will get probably 40% of your money. This is almost unlimited, the reward. Obviously that's theoretical because you won't get, like, it's really hard for you to get a 2,000% move. It's extremely hard. Because if you do, it means that you're always holding that 2,000% move, and it doesn't work that way. Like you got to take singles. But I really enjoy that part of the pattern that it pumps the stock and goes crazy and blows people's accounts.
Yeah, and the second end of the coin is like, yeah, all these stocks are crappy, and yeah, they all need dilution. They all need to dilute. But the question is, how high are they going to go to get the best price for the dilution, and who's pushing it that high as well? And how many shorts are going to get stuck?
No,
that's the other end.
Only that, Steven. How is the demand in relation to the supply that they are pushing in order for that to become a drop in the price? Because it's a balance between buyers and sellers. If there are more buyers, stock will go up. If there are more sellers, the stock will go down. If you have a lot of stock that is going to be issued and that's potential dilution, you would think that will push the price down. But if you have 100 million volume, like, it's hard for it to, this thing traded, let's see, $1.3 billion today. And they usually raise maybe 2 million, maybe 3 million bucks. That's nothing. And you can have a lot of dilution, but you have a lot of demand too. So it soak up all the supply that they had.
When you get the short bros, it's got dilution. Look at this file. And look, I've done my research. I understand the SECs. Wait.
And this is really interesting because nowadays it's so easy to get the information that something is diluted, that everyone knows that it's diluted. So it doesn't have much of an advantage anymore. It used to, but right now, every time you see a perfect short, it's a target for a perfect long eventually. Because if it goes like in a black swan kind of event, right?
That makes more sense. So how do we get more people from Mexico into the markets? How do we get them trained? How are you going to teach them?
Okay, so we have this event in Mexico. It's going to be amazing. I think it's going to be amazing as everything that we have done in the past. So I'm going to give you the link so you can provide it to
put it in the description. It is in the description of this YouTube video. It is in the description.
Yeah, so Mexico, November the 10th. We do two kind of events. The first one is going to be something like we're going to introduce a lot of concepts and how to, have edge in small caps. Salucci is going to be there to teach a little bit of options too. But mostly we're going to do it in Soho House, which is a really, really, really cool place. And mostly I love the networking part. Like, I want to know the people that are going. I want to understand what you're doing. I want to help you in your journey. And that's something that we're going to do on Sunday. And then on Monday, I do something that it's called Inner Circle, which is trading with us. Like, you can see in YouTube my videos regarding that kind of events. For me, it's the best event that I could ever go if I was, starting, because you will see the real thing, and you can, make me or make Salucci or make more experienced traders to look at what you're doing, and you can see all about mindset, all about preparation, all about edge, all about technicals, all about the tools of what we use, and everything in a one-on-one thing. It's not, it's not super broad, super specific. So I'll, you guys, if you're in Mexico City or you're, around Mexico, I definitely recommend this kind of events. There's no regret of going to those events. And it's $100. Like, it's totally worth it just because of the networking. There are going to be free drinks for 1 hour, so it's going to be cool. And that's it.
Beautiful. And for people that can't make the event, but they still want to sign up or get the advantages of Zimtra, do you have an offer?
Yeah, we do. I always recommend the people that are not in the US and doesn't have 30 grand, I always recommend to have Zimtra. It's the best choice and the best alternative out there. We do have a deal that we made with Zimtra. There are a couple of things. If you open an account, it's $250 that they give you in commissions and in platforms. And we have something called Sterling Trainee Program, which is basically having sterling instead of 200 and something, it will be like $60 or something like that. So I think it's a really good deal to make, especially if you're beginning to trade. And if you're trading already, I think Zimtrade's quite an option, because it's like having a 40K account in a 10K account. So I think it's amazing. You get advantage of those leverage that they offer, and the locates are crazy. And every time I see someone trading with Zimtra, especially in my group, I'm like, how do they do with this locates thing? Like, that's crazy. So it's a really great alternative.
My account is on the verge of approval, so I'm looking forward to joining you. I need to get back in the Spanish room. I need to get back. And
of course, bro. Whenever you're more than welcome. Anytime you want.
Thank you, buddy. Thanks for your time. That is literally Edu Trades' edge. That's Edu Trades' advantage in like 15 minutes plus 20 minutes questions. Thank you, buddy.